of the most fortunate things that happened to me in my life is that I had a father who believed in financial education. So nothing too fancy, but he believed in teaching me about money, how money worked. So at a very young age, he taught me stuff like, hey, when I always worked since I was, I don't know how old, very, very little, how to put money into a savings account. And we just took it step by step from there. So savings account, we learned about certificates of deposit, money market accounts. And what happened was when I graduated college, the next step was to get into the stock market investment. So I really had no idea. Obviously I heard about investments. The closest I got to any type of formal education was I took two courses during my freshman year of college. I got D's in both of them, changed majors and figured that the financial life wasn't for me. I was struggling pretty hard in those classes, but that's my dad. He's always been, oh, thank you, Mike. He's always been kind of right. So I've always followed what he did. So I got into the investment market because of him and just started learning about stocks. Now, I was fortunate at the same time, my wife now, girlfriend then, her grandfather type of figure was this kind of a low-key big-time stock investor. He had plenty of experience in stocks and real estate. And I just happened to meet him because I was dating his granddaughter. He wanted to vet me and make sure that I was okay to be dating her. And we kind of just have started having conversations, and he saw that I had a good mind as far as financial education goes. And basically he became my mentor without even knowing it. I remember sitting in his office all summer while he's having meetings, talking on the phone. I would just sit there on the side and I would just listen. And that's how I kind of first got my experience about, what stocks are, what the stock market is, how to buy and sell, what to look for, all of that type of stuff. So eventually, as I got more experience, I started just buying stocks. I had no real rhyme or reason aside from like a general feel. I guess I have a natural gift of kind of putting two and two together. And the more experience I gained, the more I felt that, hey, this is going to be something that I can do. I was having some some good results, and I started to fall in love with it. I said, hey, this is something that I want to do, and maybe this is something that I can do full time. The problem was I didn't have a lot of money. The stocks that I were buying were pretty expensive based on the amount of capital that I had. So it wasn't really creating any type of income that I can live off of. So of course, at the time I was overconfident. And I started hearing about penny stocks and all this fun stuff. I tried to dip into penny stocks. I got demolished by the market because again, I had no idea what I was doing. Eventually, my best friend and my roommate at the time told me about Forex, the foreign exchange market. And again, I had no idea what it was, but he told me about it. And basically he said this, he said, it's kind of like the stock market, the same trading is the same way, but you can make more money with less money in a quicker amount of time. And at the time, that's everything I wanted to hear. So I jumped in. I thought I would have the same results as I did in the stock market. And I learned the hard and expensive way that I didn't have the skills needed. So for a very long time, I tried learning on my own. I did the internet thing. I bought books, trial and error in the market, and I wasn't really getting any success. And part of it was because I wasn't fully dedicated. I was working 3 jobs at the time. There weren't no career, no anything like that. I was working 3 jobs. I was a janitor. I was cleaning banks. I was cleaning toilets at night. I was working in the school system with children that had mental and behavioral health issues. And I was working as a track coach, and I was making more money than I've ever seen in my life. It wasn't back then, I guess it was a significant amount of money. For me now, where I have a family and whatnot, obviously it's nothing that was survivable, but I was pretty comfortable in what I was doing. But eventually I started to burn out, and I started to think to the future. I said, man, I don't want to be working 12 hours a day for the rest of my life. Something's got to change. So I did something ridiculous, mainly because I was way over too confident in myself. I quit all 3 of my jobs, and I decided to focus fully on trading. And in my mind, my thought was that, hey, the only reason I'm not successful is because I'm kind of dipping a toe in, but not really going after it. If I fully dedicate myself to this, kind of put my back against the wall where I have to win, I'm going to be successful. And it's, again, in hindsight, probably the stupidest thing that I ever did. I don't advise that anyone does it, but it worked for me. And what I learned shortly thereafter is that I needed help. I needed coaching. I remember filling out different questionnaires and surveys on the internet sites, and I got a call from someone, and he basically called me up and gave me a trader assessment and made me realize that I have no idea what I'm doing. And it was at that point where I decided to get some coaching. And I wish I could tell you that I got coaching and everything was good after that, but that's not the truth. I got coaching, I paid for a course, and I still struggled because the mindset was wrong. My mindset was that, hey, now that I paid for courses, I'm going to get the super secret strategy. I'm going to make a lot of money really, really quick. And the truth is I didn't learn how to trade. I was going through the material, but I was just focusing on what should I trade? What's this strategy? How does this strategy work? And I never really learned how to trade. And the tipping point for me, or I guess the moment that made me realize that I had no idea what I was doing, is I was supposed to be trading this trend continuation strategy, right? So trend is your friend, all that fun stuff. And I remember I was trading it, or I thought I was trading, and I was using it. And I got a question from someone on Twitter, and he was like, "Hey, looking at euro dollar 4 hour, just curious, what's the trend?" And I couldn't answer the question. And for some reason, it was at that moment it hit me, like, if I'm supposed to be this trend trader and I can't answer a simple question like, what is the trend? I don't really know what I'm doing. And it was at that point where I decided to start over. I decided to actually listen to what my coach, my mentor were saying, did things the right way, and eventually got on the right track with my trading. So it was probably about a year and a half, 2 year journey all in all. And not, there's a lot of war stories in there. Again, I gave you guys kind of the short version, but it took a real slap in the face for me to kind of realize that the shortcut would take longer than doing things the right way.
Okay, awesome, awesome. Just to let you guys know as well, there is someone in there that's just playing about. So I've muted the chat box. You can still send messages to me. So if you do have any questions for Akil, do let me know, and then I'll share it. But sometime,
I'm used to it at this point,
yeah,
man.
yeah,
That comes with
sometime.
the territory. So I just smile because it says a lot more about themselves than it says about me.
Trust me. So on a Saturday, they need to be doing this. It's just crazy. But anyways, moving on. So something that I've actually got touch on is again on that part on your podcast, you mentioned that you had this time where you went through a loss, and if you could have, you would have, and that was, if you could have threw your computer away, you would have, but unfortunately you couldn't afford it. But the other thing that you went and say was that you actually took a gap from the a week, and then to you that felt like, ugh, it was not your life. It felt different, and to some regards I could relate to that. And again, to so many other people who doing trading on a day-to-day basis, the feeling of being removed from the charts, the feeling of having to stop yourself, um not emotionally go on the charts. So yeah, talk to us about that. How does someone recover from a losing streaks? How does someone recover from having experienced such a massive loss? Yeah.
Well, that was probably, if I had to pick a rock bottom moment in my trading career, it would be that. And that was after I was a successful trader. I was managing money for others, and I came in managing money with the right mindset. I had everything set up, and I was basically spineless, and I was actually trading pretty good up to that point. And I was trying to tell my client, I was saying, hey, trading has been going well for a couple months now. Um, Expect the drawdown. We all know that equity curves, just like the markets, they just don't go straight up. They go up and down and up and down. So I said, hey, we're probably going to absorb some losses soon, but it's okay. We'll get them out the way. We'll get on to the next wins. But my client had different ideas. He saw the winning streak and was wondering how come we weren't making more. And I explained to him, I said, risk management, you don't want to, over risk stuff. That's how you blow accounts. But eventually, after this hot streak, I basically doubled and tripled the position size because that's what he wanted. And I was too spineless to say no. And I doubled and tripled that position size right into a massive losing streak. And I remember I lost about $30,000 within a month's worth of time, but it was mostly within a week. And that was tough. That was by far the biggest loss I've ever taken. And I shut down psychologically. I was a mess. I didn't want to look at the computer. I wanted to throw it out the window. And I decided to shut down my computers for a week, and I just had to get away, and eventually gave myself a pep talk. I got back at it. But the worst part was that when I logged back onto my computer and I started doing my analysis for the next week, I saw that if I would have just traded that previous week and followed the plan and took the trades that I was supposed to take, not only would have made up everything that I lost, but I would have doubled that as well. So I would have made $60,000 back, because it was one of those moves. I think it was some type of natural disaster where everything V bottomed, right? So the yen crashed and then everything rebounded right back up. And that taught me two things. That taught me I didn't want to manage money, first and foremost, but it taught me just the power of trading through your plan. And really, when you're in a drawdown, the best thing that you can do is trust yourself, trust your system, just do your job, do what you're supposed to do. Don't get emotionally driven. Don't don't over leverage yourself when you're on a hot streak, thinking that, you can't lose, and don't shy away from the markets when you're on a losing streak, thinking that you're going to avoid that next loss coming. You just got to stay steady, trust the work you've done in developing your plan, trust the work you've done in backtesting that plan, and then trust yourself to actually execute it real time in the market, day in and day out. And it was a harsh lesson to learn, but it was one that stung so much that I'm never going to make it again. I'll tell you that.
All right. Okay. Cool. Actually, on that note, I would just like to add something that, again, I caught you on that, and it was something that once I understood it, it really that was like my kind of tipping point in my journey. And it was something that you said. You said success in trading shouldn't be result based or outcome based. It should be you following your plan. And failure should not be losing the money, or losing the money, or being wrong, or your technical is not working, or whatever the case. But failure should actually be you not following your plan. Those two. So like literally for me, when I started thinking about approaching the market in those kind of terms, things was really really felt different in a way. I wasn't too much attached to the money. I wasn't too much attached to my trade being right or wrong. So yeah, again, thank you to you for that, because that was literally my tipping point. The other thing that I was going to touch on, or I would like you to touch on, was your psychology. Okay, so again, as a disciplined trader, being in the game for 10 years plus, how important would you say psychology is, and what do you do to keep up on top of it?
Psychology is everything. It's like you said, it's process over outcome. You got to be process driven, not outcome driven. Understanding that we don't know, or we can't control the result of any given trade or anything like that. Our job is to take good trades, right? Mike Bellafiore has a great book called One Good Trade, where he's the owner of S&B Capital, and what he tells his the traders on his floor is just take one good trade, worry about the next good trade, worry about the next good trade. And we have to trust our numbers. If we're taking good trades, and good trades are defined by trades that meet the rules of our trading plan, we know that the probabilities are on our side. With proper risk management, we're basically acting like the casino, where we're not going to win every trade, but bigger picture, we're going to persevere. But that's easier said than done, right? It's easier to say. It's easy to say I'm going to take good trades. It's easy to say I'm going to do this and do that. It's a whole different story when you've got live money at stake and you got to enter that trade, and then the hands are shaking and the heart's pounding, and you really have to develop that belief in yourself, right? And again, there's a 3-point cycle called belief, action, results, where the more belief you have, the more likely you are to take the right actions. The more likely you are to take the right actions, the more you're likely to get the correct results. When you get the correct results, you get more confidence in yourself, you have more belief, and then you're more likely to take even more of the right action. So that's the cycle that you want to get yourself in. The hardest part is getting it started, because every new trader, when they come in, they don't have a belief. It's like, you have no reason to think you're good because you haven't proven that you're good yet. So the very beginning is the hardest part. And I think the best way to do that is, again, just listen to stuff, read books, kind of start adapting that process over outcome belief to your everyday life. It's amazing how trading and everyday life kind of combine in a but as far as a trading perspective, if you're doing the right things, like if you're spending time back testing, I don't know how many of you guys have back tested. It is a grueling time where you're going through historical data, you're tracking your results, you're making tweaks, you're making changes, you're doing everything to get your system right. It's a massive amount of work. But if you do it manually, so not automate it where you click a button and it just tells you that what you're doing is profitable. If you do it manually, what happens at the end of that process is you really start to believe because you've put the work in, and that's going to jumpstart that cycle. There's still going to be kind of hiccups. You're not really going to get strong at it until you're actually doing it live, and you give yourself time to make mistakes and learn from those mistakes. But at least it puts you in the right position to succeed. So psychology is everything. It's by far the most important part of trading. I hate to say trading is easy because it's not, but it's simple. It's not too hard to find a strategy that works. The hardest part is consistently executing it.
There you go, guys. The new Mark Douglas right there.
No, no,
Okay.
no, 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 no.
Cool. Again, I remember you on one of your podcasts, maybe like the earlier series, you was talking about, I think you was currently on a losing streak. Okay. But it's just like patience. Patience is not just waiting, but it's having a good attitude whilst you wait. So when you're currently going through a losing streak as well, right? Um, for you've asked that question, and you was like, how do you guys feel? And for you, particular for you and your trading partner, Jason Greystone, for you, it was like, oh, cool, I just need to get through these, so because I know the winning ones are coming. But how do you stay in that mainframe? How do you stay in that mindset where you know the good ones are coming and that you don't get hit, or you do get hit, but you don't let the punch feel hurt you basically.
So there's two ways to really handle that. One is knowing your numbers. And if you think about it this way, I think it's going to change the way a lot of you guys think. And this can go for some kind of advanced stuff with position sizing as well. But when you know your numbers, you know that you have a certain probability. So think about your win rate. If you're a 70% trader, you should win 7 out of every 10 trades. Obviously, it doesn't always come like that, but you guys get it 70%. If you're a 50% trader, you should win 50% of your trades, right? So knowing those numbers kind of is the big picture. Where that 50% is going to come from, you don't know, right? If I tell you you're going to win 5, or let's go to 70%, right? 7 out of every 10 trades, right? If you have 3 losses in a row, does that really have a negative effect? No, it should mean that the next, theoretically, the next 7 should be winners, or you're in a position where you're more likely to win than lose. So when you know your numbers, you can kind of put things in perspective and you no longer get scared. I'll give you an example, right? So I start off the year right now, I'm hitting at about 76%, right? Win rate. I'm typically a 55% trader. So in the back of my mind, right, what's stopping me from getting overconfident and upping my position size and stuff like that is I know that I'm probably going to face a drawdown soon because I'm hitting at a higher rate than I'm supposed to. I'm hitting at about 20% higher than what I should be. So in the back of my mind, I know that a drawdown is coming, a losing streak is coming, and I can prepare for that. I can accept it, right? So instead of it being this big scary thing, we're like, oh no, it's a losing streak, what's happening, panic and all this fun stuff. It's like, hey, this is supposed to happen. Let me take my punches. We'll get these losses out the way. We'll get back to the winners, right? And the same thing for, winning streaks, or again, both ways you can kind of anticipate what happens next. So that's one way, just knowing your numbers and being honest with yourself about what type of trader you are. Again, I'm not saying this is easy. You mentioned I've been doing this for 10 years, which makes me seem really old now, but I've got a lot of experience with losing streaks. So when I first started, if you would have asked me this question, I would have given you a completely different answer. I would have panicked. I would have hated it. I'm at the point right now where I'm pretty much numb to it, right? I take losses all the time. It's second nature. It's just part of the game. Another thing is proper position sizing. I think that too many traders trade too large of a position size, right? I was always taught this, right? First of all, trading is a key. The key of trading is risk management, right? Great traders or good traders are great risk managers. But as far as position sizing, so how much you're risking on each trade, in my opinion, I was taught this, right? Your position size or your risk should be so small that a winner doesn't make you happy. As far as if you win a trade, it's not any type of life-changing thing. You can't go out and buy a car or a house or anything like that. And a loser shouldn't make you sad. A loser should be a loss, but it's not a big enough loss that it has any negative effect on your life. And if you're using proper position sizing, if your wins are small, if your losses are small, you'll start to see that monetary effect doesn't have the same emotional pull. It's kind of I guess the difference between like if you lose $100 bill, you're probably going home and you're pissed off, right? Because you lost $100 bill. If you lost a penny, not that big of a deal. So by trading small, you can disassociate that emotional pull that money has, and then you can focus more on the process of trading and not just the outcome of the trade. So those are two things that will help massively.
Perfect, perfect. Also, just you touch on obviously the winning rates. You just gotta know yourself. Okay, I just wanted to add that you just gotta know yourself, because for those of you who know about Richard Dennis, he's again massive famous trader. His losing rate was 95%. 95% losing rate, and he would only win about 5%. But this is the same trader. I believe it took like a $2,000 to like 10 mil plus something. I'm not sure about that, but he did something like that with like over 10 years. But again, just you could have 90 trades of 100. Obviously, you could have 90 trades, loss, and then you could have that 10. But as long as your R&R is obviously sufficient and can recover your losses, your losing rate don't really matter. Cool. So moving on, I'm just gonna take some questions from the chat. So Ruben asks, what should we do after a loss and after a win? I think that's a great question.
Get away from your computer. The best thing you do after a loss or win is get away from your computer. Something I used to do when my early days of trading, it's a little embarrassing, but I had like a playlist. So I had a set playlist. I had like regular loss, big loss, regular win, big win. And it's probably like 2 or 3 songs in each. And after the outcome of every trade, I'd put that playlist on, I'd get up, I'd dance, and it was kind of a pattern interrupt, right? Because imagine the first thing that happens after a win is you're excited, you're emotional, right? You want to kind of, find the next trade and enter right away. Same thing after a loss. Maybe you want to make up revenge. You want to make that loss up. You try to get a revenge trade. So what I've discovered is that if I can just get away from the moment, get away from my charts for like 5 minutes, when I return, I'm in the proper mindset. So I would have a playlist. I'd play it. I'd dance around my room and whatnot. And I would tell myself that, hey, once this dance is over, once this music is over, boom, you got to reset. The past is the past. You forget about it. Let's move on to the next opportunity. And that helped with kind of just, not letting one trade bleed into the next one.
Okay.
Don't tell anybody about the dancing, man. That's
yeah. And how important is journaling? I know this. So, for example, for me, and this is something that I've, especially my early days, my early months. This is something that I've just like I didn't even want to hear about it. If a mentor, if someone said anything about journaling to me, that was it. Like trust me when I say I wasn't gonna listen to this person for the next 2 to 3 months or so. But throughout my journey, I've learned the hard way through taking so many losses that journaling is so important. But for you, again, 10 years in the game, not only just for yourself, but you work with other new traders as well. How important is journaling for newbies, existing traders?
Journaling might be one of the most important things out there. Here's the gift and the curse about trading is in many cases we work for ourselves, right? We're our own bosses, and that's great because that's what everyone wants. You want to be an entrepreneur, you want to do what you want when you want, complete time freedom, financial freedom, all that fun stuff. The side that people don't see is that we are our own boss. So it's not like as if you're an entrepreneur, you don't have a boss. You do have a boss. It's you. So you're kind of playing 2 roles. You're the employee and you're the boss. That means you have to check up on yourself. You have to evaluate yourself. You have to hold yourself accountable. And if you're not journaling, you're not doing that, right? If you're not checking up on you, who is? Nobody. You're just kind of drifting free out there, able to roam and do whatever you want. And that's not how businesses work, right? Businesses need structure. So journaling is important, obviously, both from the financial standpoint. You want to journal your trades. You want to take notes. That way you can become a better trader. You can go back and review certain things. You want to journal the psychological side as well, right? You want to take notes about how you feel, how did you feel beforehand? How did you feel after? Did you handle the trade from a process perspective the right way? Like even grading yourself on your trades is a big thing. Like, how did I do my entry? How did I do my exit? How did I do on trade management or whatever else you have there? You need to consistently and continually track your results because it's the only way you're going to improve. And if there's one thing I've learned in all my years in this game is that, when I first got into it, I thought that, oh, this is simple. Find a strategy that works, and I'm just going to do the same thing for the rest of my life. And oh man, no, man, market conditions change. If you're not able to adapt to them and continue to grow, you're going to be left behind. And I've heard some war stories of traders that have turned like 10,000 into 50,000 and then blew it all in 2 years after that. And that scares me to death. And I'm never going to put myself in that situation. So you've got to journal. You got to do it both for the psychological side, both from the kind of the quantitative side as well. But it's extremely important.
100%, 100%. And again, if I could just add to that, like with the journal, something that I've truly experienced for myself was that it would give you a theme, okay, and it will give you like a recurred pattern. So for example, it could be that you feel rush prior to a trade, or it could be that you feel rush trying to take your profits. So across 20 trades or 200 trades that you took, that's the theme or that's the pattern that you should be seeing. And now that you've journaled it, and now that you see in front of you, that's your working point. That's what you need to work on. And upon working on that, then you're going to see different results, because the definition of insanity is you doing something over and over again expecting a different outcome, whereas obviously that's not the case. So cool, moving on. How do you build confidence? That's another great one.
Say that again.
How do you build confidence?
It goes back to that belief, action, results cycle. It's very tough in the beginning because you kind of have nothing to go off of, but you build confidence through experience, and that's the only way. You have to do the right things and consistently do the right things. And once you see the results of doing the right things, you become more confident in yourself. But very scary at the beginning because it's just tough. If you don't have a track record, it's hard to have belief in something. It feels like everything is a gamble. That's why back testing is key, taking the proper time to learn, to practice what you learn, to back test, to forward test, demo trade. Going through the proper steps is going to prepare you as much as you can to trade live. But nothing's going to simulate the real experience. I'm a big sports guy, so I look at everything like sports, right? It's one thing to be on the practice field and study the playbook. It's a different thing to get called up for your first game and thousands of fans are cheering, you're out there on the pitch or whatnot. And you got to do it against other pros. It's tough your first time. You get the nerve, but once you get more experience, when you get more playing time, things start to slow down. You start to adapt. You realize like, hey, I can do this. You build confidence in yourself. You start to become a better player or a better trader. But it's tough at first. So you get real life experience. It's just doing everything the right way in preparation for your chance to go into the game.
100%, 100%. And again, I don't know why a lot of people feel different when it comes to demo trading, but I feel like I feel like you shouldn't rush demo trading. I feel like that's where a lot of people go wrong. They feel like, oh, they're not trading for real. Yes, I will give you, the true feeling is not there, the true rush, the true adrenaline is not there. But that's not something that you should be craving, okay? Because winning is more important than playing, especially obviously when it comes to trading. Just because you want the feeling of being in a trade doesn't necessarily mean that you're going to win. Okay, so if you're in the demo stage right now, don't rush. Okay, build your confidence through demo right now. Okay, honestly, you have nothing to lose, no financial loss right there, but build your confidence within that. Okay, get to know your strategy. And that's something that Jack Swagger talks about, which is every trader needs to find their own light. Okay, you could have a strategy that's 50% winning with this person, but to you it might be 70%, or to you it might be only 20%. That's because you spin it your own way. You interact with it your own way, basically. So yeah, that's what I would say on that. So don't rush. Spend time on demo trading. There's no shame in that whatsoever, because you're in your own lane. You're not in a race with anyone. So you're in your own lane. Cool. So moving on. Again, touching back to someone being disciplined. What was your one, or if you had one or multiple action points that you took to become disciplined?
I took and this is actually a moment that changed my trading career around. So, and this is going to follow up right on the journaling conversation. So, there was a point in time where I was trading. I had a plan. I did things the right way. I learned how to trade, plan, back tested, all that fun stuff. And I still wasn't seeing quality results in the market. And I was trying to figure out what was going on. I remember I took a month during the winter. That's typically when I do continued education, like a full review of my journal. And I started going back through all the trades I took, seeing, did I take bad trades or whatnot? And I started noticing that I was making a lot of mistakes. So it was entering trades early, entering trades late, taking targets early, moving stops back, all the, the normal stuff that we do. And I would compare the results that I had in real time to the results that I would have had if I followed my plan correctly. And I noticed that, well, what do you know? If I followed my plan correctly, I would have been profitable. I wasn't profitable because I was breaking my rules. And that's when it kind of hit me that it wasn't my system. It wasn't the strategy. It wasn't the broker. It wasn't the president, the world. It wasn't, all the excuses we make for we can't be profitable. It was this guy in the mirror. And what I decided to do is I put forth a challenge for myself where I said, I'm going to start slowly, well, I'm going to eventually eliminate all my mistakes because I identified that's where the problem was. But I wasn't going to do it cold turkey because cold turkey, doing it right away, doesn't really work. Typically, it has a worse result. Like, I remember trying to give up sugar one time cold turkey. It ended horribly. I was, on the couch with like 5 sleeves of Oreos going crazy 2 days later. But I decided to make one less mistake a month. So if in January I made 20 mistakes, my goal in February is to make at least 19, right? If I made 19 in February, then my goal was to make 18, right? At minimum, at least eliminate one mistake a month. And eventually that would put me on the right track where I'm making 0 mistakes. And this is what really had me start thinking about process over outcome, because at that time I'd really given up on being a consistently profitable trader. I figured it wasn't working. I had only a limited amount of capital left. I was going to go back to cleaning toilets. I was like, whatever, let's just give it one last try for a few months before we give up. And I really started focusing on that process. The only goal was to take good trades, not make mistakes. And I remember one time I got this statement from my broker, and I sent it through email every month or whatnot. And I'm used to seeing numbers in the parentheses, so losses and whatnot. And I get this statement, and it's a positive number, and I'm like, what? Like, no. So I called my broker up, and I'm like, I think you guys sent me the wrong statement because this dude just made some money, and that ain't me. And they sent it back. They said, Mr. Stokes is the correct one, and I'm like, I made money. Like it was crazy, and it was all because I had focused on eliminating mistakes. I think I was down to like 3 or 4 mistakes that month. And that was kind of what hit me, where it's like, man, like this really works. All I got to do is not F it up and I'll be in a good place. So limiting mistakes is key. Don't try to do it all at once. Just try to make one less mistake a month, one less mistake a week, whatever have you. Try not to make the same mistake twice. So if you take targets early on one trade, boom, that's it for the month. You can make another mistake. You just can't make that same one. And eventually, I think you're going to start to see some amazing results in your trading.
Okay, wow. I'm literally dead. Like you literally sent back the statement to your broker. That's so funny. That's so
I'm like,
funny.
this can't be me, man. Like, you're playing.
That's funny. Okay, cool. Actually, guys, on that note, this is very, very key because, as I said at the start of the call, we are at the end of the month, so this is the perfect time. Spend today, spend tomorrow. Look back, to the start of the month, January. Look at what could have, review basically. Okay, really sit down tomorrow. Take about an hour or so. Look back at your trades. Really go in. Use the playback button on TradingView, and then look at everything basically. Come up with some key action points for February, and that should be your action points just for February. Work on those, and then see if there's any changes come February. So thank you for that. That's really, really important. So moving on to the next question. It says, when you're figuring out what strategy worked for you, how did you know the difference between needing to look for another strategy more suited for you, or needing to keep practicing in order for it to click? So I believe, again, for a lot of people, they've either been brought onto something where there was already a strategy created. So especially for a lot of beginners out there, how long should they give themselves, or what are some of the indicators they can use for them to say, okay, cool, this is really for you, or this is not for you, or you just need to keep going on until it clicks for you?
I think you got to play around with you got to play around with a few different things to kind of figure out what that right feel is. But it is going to come down to kind of personality. When we always teach that you want to trade something that's suited towards your personality, suited towards your lifestyle. So, for example, I'm not a trend continuation trader, so I'm not someone that tries to hop on the trend and ride it all the way to the moon. I tried that before, and psychologically, it just doesn't work. Right now, it's very tough for me to be up a lot of money and then to have it come back down and stop me out for either nothing. Really difficult to see that money on the table and not grab it. And because of that, I found myself making a lot of mistakes. So experiencing that made me see that I was more of a counter trend trader, someone, or even a conservative trend trader, someone that likes to get in and out of the market. I don't need kind of the big home run moves. I don't need to brag to anyone about making this many pips or this much money off this. I just want to get in. I want to get out, and leave as little at risk as possible. But I didn't know that at first. That just took kind of comparing styles. So I think you have to play around with a few things. You got to kind of understand what your situation is. What type of person are you? Are you aggressive? Are you conservative in general life? And then really create your system around your personality, because that's going to be the biggest thing that's going to help you make mistakes typically, or help you stop making mistakes. Because what happens is a lot of our mistakes come because we're in an uncomfortable position where we want to do something, but maybe our rules are saying do something else. And it's very hard for us to kind of balance the two. If you truly believe in what you do and your trading strategy is built around that, you have that confidence, you have that trust, it's a lot easier to follow your rules than doing something that really doesn't go with who you are as a person. So you gotta fit your trading style and your personality, not just around your lifestyle, but around you as a person. And that takes understanding yourself first and foremost.
100%, 100%. And the way I looked at it was, this is like, the whole schooling system. When you first start from, like, primary school, you were taught so many things, but as you went up the ladder and as you went into higher education, high school, then college, and then whatnot, that's when you really started to become specialized in one or two subjects. And this will be the same thing. At first, you might come across so many strategies, so many different way technicals and stuff, and it will feel like strategy hopping. You will feel like you're hopping from this to that to this to that, and it should be that way. So don't be frustrated about that, but really just take it in and really see yourself. How do you feel when you place the trade? How do you feel when you're analyzing it and stuff? And then mark those things down, so okay, cool, this is the right one, this is not the right one, so you can start ticking some of the boxes. But again, great information there. Cool. Moving on. So, do you think it's a good idea spending much time on the charts looking for trading opportunities?
No, I think spending time on the charts is very important, not necessarily looking for trading opportunities. I think you should be spending time on the chart practicing, just doing analysis, understanding the market, learning the ebbs and flows, using or training your eyes to see certain things, looking for small clues that the market leaves. I think time in the market is the best educator out there. I think it's better than any coach. But you need to know what to look for, and you need to practice at it. So I'd rather tell people to spend time in the market just practicing versus looking for trades, because if you're looking for trades, you're going to get what you're looking for, right? It's very easy to create a trading opportunity. We can look at any chart on any given time frame, any point of the day, and you can convince yourself to buy it or sell it. I think if you're looking for something hard enough, that's going to happen, and that's going to be a negative thing. So you don't want to do that. So time in the chart is key, but not looking for trades, just practicing the skill.
Okay, perfect. Cool. So as we're wrapping up to, like, coming up to the hour, let me know, guys. So this is the chance for you to get in any last minute questions. But so from me, Akil. So this is a question regarding obviously tax. Now, obviously there's so many different country laws and stuff like that. That's gonna get in the way. But for someone been in the game for 10 years, how should someone, like an entrepreneur, because obviously when it comes to trading, this is not something that you can like you can't get it bracket. Like 1 month could be only 10,000, the second month it could only be 5,000, so you can't get tax on it. But how can someone, especially someone who's looking to go into full-time trading, how should they set them up from the get-go?
I would say you have two options. Obviously, the best thing you do is consult a tax professional. You got to say that for legal reasons, because people do all types of weird stuff these days where it's like, he told me this and now I'm suing him. You guys laugh. It's true, man. Unfortunately. I think more so than anything, you have to prepare. I just spoke to a good friend of mine. He's in the stock market. He's actually the one that got me into Forex trading. And one of the issues he has this year coming up, he had a big year of trading last year, right? 2020 was amazing for a lot of people, him included. But he didn't prepare for taxes. So now he's scrambling because he spent a lot of the money that he earned. And now he's like, crap, I'm going to owe this much. And I did that my first year as well, right? I did my taxes the next year and I'm like, wait a minute, hold up. So I think the first thing you do is prepare, either actually put it aside, meaning remove it from your account and put it in a side account that's dedicated to taxes, or just understand, mentally keep it in your account. That way you can compound at a normal rate, but understand that, hey, I'm going to have to pay this much on it, right? I'm not a big fan of you. I think in general, you shouldn't be taking money out of your account and spending it anyway. But I think you just need to prepare like, hey, I'm going to owe something. I need to make sure I have this aside. If you are someone that is, once you become consistently profitable, I'm pretty good at kind of understanding where I'm going to be at each year as far as what I return from the market. If you're at that point, you can actually start paying quarterly. It's gonna save you a little bit. You can actually pay quarterly taxes, and each quarter, take some out of your account, give it to whoever you're paying taxes to, and that's going to help a little bit from the big number that you'll pay at the end of the year. But either way you look at it, you have to just understand that you are going to have to pay something, and just mentally prepare for that. Don't just spend it before you get a chance to put some aside.
For sure, I understand. And again, I do have this question. I knew it was gonna come up. It was so do you have an LLC or corporation to pay lower tax rates? I do know a lot of people from the US. They create another company LLC and they pay themselves through that. So I'm not sure if you do that or what.
Yeah, I have an LLC. Yep.
Yeah.
And the main reason, even before tax purposes, the main reason I did that, because tax purposes it's not gonna be that much of a difference, I guess, depending on where you're at. But protection. Again, I started off by managing money, and the worst thing you can do is be personally liable. So a LLC kind of separates you from your business. If something were to happen, I don't know what it would be, but if something were to happen and maybe I got sued for giving bad tax advice or something like that, they can't take your personal stuff. They can take whatever it belongs to the business. So it is a form of protection, especially if you're going to be trading and doing more through trading than just for personal interest. If you're going to be starting a signal service or managing money or something of that sort, I always think it's a benefit to separate yourself from your business, just in case. There's no negative to it, in my opinion, aside from the paperwork you got to do to get started.
Yeah. I heard that. Okay, cool. So again, I am going to respect the time, but I do have two kind of linked into one question. So, and it would be, so, given your 10 years experience, what would be an advice that you wish someone gave you prior to coming into that 10-year? Number one. Number two, now that you have spent 10 years into the game, what would be some of the things, how would you advise someone to really be money smart? So as you're deep into it, as you find yourself, as you become more profitable throughout the years, you're making more money. And I know this is something that you hold very close to your heart, which is wealth creation and stuff like that. So what should someone do with their money, basically? I know this is not a money management course, or you're not an advisor as well, but just some tips, some guidelines as to what a young entrepreneur should be doing with their money, number one, and some of the key tips in terms of your journey into your 10-year.
So I guess the two best lessons that I have from my trading journey are, one, sometimes you need help. I'm a very stubborn person. I've worked since, a young kid building houses and doing landscape and stuff like that. I've always been someone who's just grinded it out, right? Everything that I've earned in my life has been from just working harder than everyone else, where it's like, hey, if someone's going to work 5 hours, I'm going to work 7 hours and I'll get the upper hand that way. And trading wasn't necessarily the same. I put a lot of hours into trading and I just wasn't progressing. I probably would have gotten successful eventually, but it would have cost me a lot more money and taken a lot more time. So understanding that you may need help, and that could be, it could be coaching, it could be just finding another successful trader and being like, hey man, just, give me some advice. It could be, doing what you guys are doing right now by coming on to, different podcasts and hearing these different interviews, right? That's massive because you're not being stubborn. You have a growth mindset. You're willing to listen to other people and kind of take the bits of advice and use that. So that's a big benefit for you guys versus, what I see a lot of the time on the internet. But understanding that you might need help and that's okay. Kind of putting that pride aside that, there is something to learn. That's one. Two is, I focused so much on learning what to trade or trying to learn what to trade instead of learning how to trade. Again, I was looking for magic strategy that I never actually knew how to read a market. The thing that I know now is that if you invest in the skill of how to read a price chart, for you guys that are going to be technical traders, you can do anything. You can do anything. And I've spoken to coders who trade automated systems who, I had one guy come through my course. He's a systems trader. I'm like, hey, this is probably not for you. We don't really do the indicator thing. And he's like, no. He said, I want to learn price action because that's going to help me become a better developer. And he's off making systems now based on the knowledge that he knows. So if you invest in the time of learning how to read a price chart, you can literally do anything as a trader. And then I wasted a lot of time not doing that. So those are the two biggest lessons I learned. As far as entrepreneurial lessons in general, a key concept is this: it's spend less than you make. I mean, that's the formula to wealth creation in general. It's spend less than you make and invest. So if you spend less than what you make, right, you'll have a surplus at the end of the month or the year, right? If you then take that surplus and you invest it, you put it in a situation where that money can make money for you. Now you're making even more, right? Because not only are you making money from your job and you're not spending it all, but you're also making money from your investments. Your investments are working for you. There's a book called The Richest Man in Babylon, and it said you got to make your money work for you. And that is so key. The hardest part is this, and this was difficult for me. I'm not someone that comes from money. I made some mistakes, and I'm a cheap person. I don't really buy much. I don't really have any material things at all. It's just not the way I am. But when I first started seeing success in trading, man, I bought some things, right? I bought some things right away, and thinking that the money would be like that forever. And my first hot streak, my first big check that I got, I spent it on some stuff. I don't regret what I spent it on, but I should have saved more. I spent it all thinking that, hey, this is normal. It's gonna come in every month like this, and it didn't. And it was a really good year, but then the next year was a worse year. It wasn't as good, and all of a sudden that money wasn't the same. It was like, oh, wait a minute, I'm not as financially secure as I need to be. And that was a wake-up call. So I think one of the best things you can do is that when you start becoming consistently profitable, don't expect that it's going to be like that forever. Always plan for the worst. Continue to live within your means, I guess. Just because you never know what the future is gonna hold. And again, I didn't make any massive mistakes. The stuff that I invested in was key. But if I could rewind time, I would have been smarter with, and I would have put more into that emergency side, more into a cash buffer just for those rainy days.
100%. And as you were saying that, I remember your podcast with the latte effect.
Yeah.
So it was just so funny because when you mentioned that, it just hit me like even the water change, even like you would go for like the much more expensive water, your taste change and everything. So that was funny. Okay, cool. Guys, we are gonna wrap it up there. Honestly, it's been amazing just listening to you, tapping into your mindset, bro. Truly appreciate it. But I would just like to take a couple of minutes to just say, guys, if you truly did get a value from this, here's some of the things I want you to do. Number one, go to any of the major platforms, whether it's YouTube, Spotify, Apple Podcasts or anything like that, and go and look for the trading coach. Honestly, if you took a little something from today, you don't know what's in store once you do listen to that. And if you have been listening, keep on listening, because Akil is going to say something, because he's always on the growth, right? He's going to say something that's just going to tip everything for you, and then everything's going to click. I know it did so for me already. Number one. Number two, the second thing I would like you to do is share this to someone else as well. There is someone else that is in need of this right now. Okay, it could be this podcast right here. It could be this. It could be the podcast that Akil was making. There you go. Okay, so it could be anything that this guy has delivered. And again, if you do want more of, one-to-one with Akil and whatnot, he is the trading coach at Tier 1 Trading. Go look at the free trial that they have for, I believe, 2 weeks. They do live trading together and stuff like that, so tap more with him. But other than that, guys, I appreciate you guys for coming in. Akil, once again, bro, thank you. It's been an honor. It's been a pleasure. The next time I will listen to your podcast, I know I'm going to feel different, because now I've seen you, I put a face to the name. But guys, let's go and put some 111. If again, you've got some massive value, let's thank our special guest for today. So his podcast is The Trading Coach. The Trading
So
Coach.
I would say this too. If you guys on social media, don't be afraid to reach out. I do respond. Obviously, if you don't spam me or stuff like that, I think all those guys are gone. But if you have a question about anything, don't be afraid to reach out. I respond to every single comment or whatnot. I'm trying to help people out there. So don't be nervous about it.
100%. 100%. So what's your IG? His IG, I believe, is just Akil Stokes. Let me try to find
Akil
it.
Stokes RTM.
Yeah, if you could just type it in for me, please. Yeah, so where can you find the podcast? The podcast is on Spotify as well. Just look for The Trading Coach. Just look for The Trading Coach. It's on YouTube. It's on Spotify. Again, all of the major big ones. And as I said at the start of this call, guys, this is for you guys, by you guys as well. So if there is a podcast that you would like Akil to talk about, shoot him a DM, shoot him a message, and he would love to just get down with it. And yeah. Okay, awesome. So guys, oh yeah, watch out for the fake accounts as well. These guys, they
If I DM you first or ask for money, any of that stuff, it's not me.
Yeah,
It's not
watch out for
me.
that. Watch out for that. Okay, cool, guys. Right, bang on to 9 o'clock. So, guys, appreciate you all. Thank you, and I'll see you guys on the other call.